Once again, oil prices are going to complete a month in 2022 in the green. So far, every single month this year would have seen a positive oil price change. Will June be any different, or is this a market you simply cannot sell? Welcome to our market analysis videos here at ZenFedX. For those who are new to the channel, my name is Connor, the Senior Market Analyst at the company, providing to you daily videos on market analysis and educational content as well. And in today's video, I'm going to give you a detailed insight into the fundamental and technical outlook for oil prices going forward. By doing this, hopefully, it will give you inspiration for your oil trades in June. Enjoy. Okay, so looking at demand prospects first of all, and the fact that China has adopted its strict zero COVID policy is probably the reason why oil hasn't actually gained as much as it could have over the past month. But the situation during May, I'd say, stabilised, and now, as we head into June, Shanghai is set to lift its COVID-19 lockdown on June the 1st, tomorrow. Now this will allow people to leave their homes and drive their cars from tomorrow. And this is extra demand. This is demand that wasn't there last month, and oil prices still were on the rise. On top of this, China announced a fairly weak fiscal stimulus package. But anyway, this was a bear factor in play, this whole zero COVID policy, and the policy is still there, but we are seeing lockdowns, and I think this is going to continue. The bear factor is going to continue to fade away as China continues to unlock its economy. And this is a moving story, of course, and one that needs to be monitored throughout the month. However, if China continue to becomes more, their economy becomes more unlocked, this will naturally boost oil demand prospects and boost the price of oil. And this is a critical story for oil prices in June, in my opinion. Now, looking at the supply outlook, and I'm sorry to sound like a broken record here, but it's quite worrying. It's concerning for traders. And this is quoted according to the Bank of America's Global Research Report. Oil inventories across the US and Europe are at dangerously low levels, and as a result, the 2022 and 2023 price prediction of $102 is now very questionable. That was the quote, and that just says it all for me. And Hungary requested $1 billion to upgrade its oil production refinery so it can then restrict oil imports into Europe from Russia. The situation there is now sorted, and Europe have now slashed oil imports from Russia. It's necessary, of course, given the shocking situation in Ukraine, but the effects of this are going to be long term, right? And I think that it's going to keep oil prices high for a long time. And that's how simple I want to keep it for oil. And when I look at my forecast for June, when you combine the supply and the demand outlook, it looks to me like oil is ready to make a significant breakout. I'm a bit annoyed actually that the couple of days trading that have already happened, like we've seen on oil, because I wanted to trade the breakout as such after this video. But it's always been grinding to the upside despite the sort of range that we were in that people were claiming, and it still posted some significant gains for May. And if I'm being honest, I think for June my targets are for oil to exceed $125 per barrel. Let's try and find that opportunity on the chart now. Okay, so I'm on the chart for this oil market right now, and these are some of the drawings that I had throughout May's forecast for the last forecast video, and I was mentioning how the market was sort of being squeezed, and we were either going to get this move and break below, or this move and this break above. And I think it's pretty clear to you right now. You can see exactly what happened. Broke above this market, broke above this range. After we broke above this range and created a new high that we have here, you can actually see that the market came back down to retest into this level. And anyone who was trading sort of break and retest, hopefully you had your stop loss maybe just below this 95 level, which is trading now significantly up. But then when we did have this expansive move to the upside, we went and broke another key structure level up here. So as you can see, we're bullish, right? We're bullish on oil, and I'm going to be looking for the best sort of buying opportunities right now, because obviously we wouldn't just go diving into buying as we can see this daily candle right now. It looks like it's pushing higher. I've got 125 as my take profit level for any trades that I get in. But if I'm being honest, I wouldn't rule out the market actually going out and testing like 130 level up here, this high up here. So we can, if you want to actually add that in as well. I'll be interested to see if you think we're going to get that headline next month where we're going to see this new high at 130 potentially. Now, for me, it's now where I can get the best sort of trade. And the best trade, which we may not get there, is down towards this order block down here, or this institutional candle, where we had this expansive move which broke this structure. This, for me, is sort of the floor of the market. So any trades that may not work, we're looking towards to test this 100 level, taking this low and this liquidity down here into our order block, and then moving higher. So something like this. That I understand that's quite far away, so maybe just keep that one in mind, and maybe potentially you can add an alert there, which I might do actually around this level. So I've got an alert set there, so I know that it's going to be going towards our order block. I can act on it, and I'll be looking for a break of structure on the lower time frame. Other than that, if I actually look at where we can get the best entry, now we do have this market imbalance in here, and I like to use sort of the 50% of the imbalance as an area to trade from. So what I'll be doing again, setting my alert at 112, which is the 50%. I'll actually move that just around here so I know it's sort of action time. Save that. And what I want is the market to come down and test and fill this imbalance, this market inefficiency, which I use quite a lot in trading. It's really, really powerful. If we do reach this level, my alert goes off. You can do one of two things. Is what I'll be doing. So I'll either be placing a trade from the 50% and being aggressive. Stop loss maybe just below this wick. Targeting 125, which is a 3.2 risk reward trade, or 4.27, which is or 130, which is a 4.27 risk reward trade. One of those two. The safer play, and the play that I prefer, is waiting for the price to come into this level. When we do get the price coming into this level and our alert goes off, moving down onto a 15-minute, 5-minute, 1-minute chart, and waiting for a clean break of structure. And by a clean break of structure, I mean something that would look like this. And then we can enter from sort of the institutional candle that gets left behind from that break of structure on a lower time frame. Then we'll be looking at a much better risk reward ratio, so that's something to bear in mind. But they're my two plays for oil for the upcoming month. I want to know in the comments where you think oil is going to be heading this month. Are you as bullish as a lot of people? Have you got a different opinion? Do you actually think oil is going to be going down? I'd love to hear why. But other than that, I hope everyone has enjoyed this video. Come and join a free Discord channel where I'll update our traders and our community on these trades as we go. Other than that, I hope everyone has a great trading day, and I'll catch you all for the next forecast video. Cheers.